Good morning, Steve Freed with the morning grain comments. Markets are mixed overnight with the beans, corn, and wheat lower, and meal and oil higher. I think the higher product trade versus beans has got the nearby January soybean crush margins testing $2. Cash is even stronger. So the domestic demand for U.S. beans for the crushes is very good and probably will continue to support the basis levels. As far as the export market is concerned, our exports are still running 33% behind a year ago versus the USDA's guess of a 10% drop. That continues to offer resistance to the market at this 1250 area. We also note that South American weather is pretty favorable. Southern Brazil could get some rains down the road. Argentina, while looking at some of the moisture indexes, is dry, they are getting timely rains and temperatures are not hot. And so about 60% of the Argentina soybean crop is planted. And the big thing about Argentina is after the election, there's concern about a maxi currency devaluation, and also they can impose export taxes. So we have to kind of watch that pretty closely. But South America weather is not a positive to the bean market. We have seen some short covering in long wheat, short soybean spreads, and that's offered beans a lift while weighing on the wheat market. Yesterday, I think Kansas City and Chicago made new contract highs, but they're lower overnight. And also in the wheat, we've seen a Minneapolis back off from that 1066 high down to 1013 as cash basis continues to collapse. As far as other wheat news, we're watching Russia pretty close to see what they do to their export taxes. Higher Russian prices could either rally our futures market or could send some export demand to the U.S. Wheat exports lifting so far are behind pace versus last year and to meet the USDA's goal. We also note that Algeria delayed their tender. I think they were surprised that the price was $20 a ton above what they bought previously, and they were hoping for more offers from other origins to get the price down. Also, as far as weather is concerned, U.S. Midwest is dry, should be dry, and I'm here in Nashville, Tennessee today for wedding of my youngest son, Spencer, and Mother Nature has provided us a good day with 70 degrees and sunny weather. It isn't too far down the road, though, on Thursday where temperatures in Chicago drop again below freezing. Europe's dry, most of Russia's dry, but again, most of the focus in the marketplace will be South American weather and crop production. We also noticed that the U.S. corn and soybean harvest is almost complete. Behind me is a picture of a farmer who's completed his harvest in the corn near northern Illinois and near our home. And I think that winding down of the harvest is going to make end users try to bid up for corn and beans with these good domestic margins. So markets are overbought, probably due for a correction. We'll see if the 520 area and $6 area is the range for corn. We'll see if 850 holds as pretty strong resistance in nearby Chicago KC wheat. But any Russian higher trade will put us over that 850 resistance. 1180 to 1240, I think, is still the range in soybeans until we know more about China buying. Yesterday's Xi meeting did not last very long. Have a good trading day.